Hello, and welcome to episode 2 of Going Live with Rufas. So I'll be focusing on currency pairs, and at the same time, we look at a couple of indices, commodities. We understand what's happening currently in the world, and hopefully by the end of the session, we'll understand where the opportunities lie, what's the impact of the current news happening in the market, and how you can respond to that. So apologies for that. So let's continue. So before I make any progress, I would like to begin with our mic test. So if you guys can hear me clearly, kindly respond on the live chat, and then we can proceed from there. So if you can hear me clearly, kindly respond on the live chat, and then we'll make some progress from here. Awesome. I have a response. Thank you, team. This is clear. So now we'll be looking at the market open. We know what has been happening. So since yesterday, the dollar has remained very weak. It was a big surprise after having enjoyed some good time trading with a strong dollar against other currencies. But since Monday through to Tuesday, we have experienced a much weaker dollar. So looking at the major currency pairs, we have seen some major shifts. One of them, already you can see the New Zealand dollar has been extremely strong against the dollar. So if you measure the variance from the low of the day to the current price level, we are up 1.48%. So the same case applies to the USD Swiss franc currency pairs. So in this case, you can see today a big shift, a drop of about 1.17%. With USD yen, a similar case has been happening. So right from morning up to the current time period, we are down 0.5%. If you look at pound USD, right from the day's low to the current price level, we are up about 0.82%. And the most surprising one of all is the Euro USD, which has rallied from today's low up by about 1.19%. So clearly, one theme is quite evident in the markets. And the theme is that the US dollar is currently very weak against a set of other currencies. And this might be a much welcome breather, having experienced a very strong dollar. So last week, we experienced a period where the Euro USD was, for the first time in a long period of time, where it was trading below parity. So by parity, I mean the price level where the euro is equal to the dollar. So at parity was around 1.00, being the exchange rate between the US dollar and the euro. So at this point, you can see we slightly broke this level, went down to around 0.99515 before the market bounced. And from Friday last week, the euro gained against the dollar, gained on Monday, and today being Tuesday has continued rising higher. So at the same time, if you look at the macroeconomic view, we know that there has been a lot of pressure on the Eurozone to raise interest rates in order to control the rising inflation and at the same time support the currencies. So the euro might be gaining in the next couple of hours, maybe days. And this is as a result of the sentiment that the ECB or the European Central Bank would raise interest rates by at least 50 basis points or 0.50%. So that's the current sentiment. So if you do a very quick Google search, I believe it's a news that was just announced the other moment. So we are talking about euro 50 BPS hike. So just a quick Google, you can see it's the top news in the last 2 hours from Reuters. So Eurozone bond yields jump as ECB may consider 50 BPS July rate hike. So I believe the next ECB meeting is next week. So once the ECB meets next week, we're expecting at least a 50 BPS rate hike. So if this happens, then investors could already be pricing in strength in the euro. It's a much needed relief, especially for the traders. Here we'll be looking at a potentially stronger euro compared to other currencies. But all the same, we know that with the dollar, it's also looking to raise interest rates after reading an inflation rate of 9.1%. And this was late last week. So with inflation rising across board, the countries that have the highest capacity and ability and willingness to raise interest rates at a faster pace might enjoy a stronger currency, while at the same time, the ones that are not able to raise interest rates fast might enjoy a much weaker currency. So it's a common theme we have been seeing in Japan, where they are not able to raise interest rates as aggressively as other economies, and this has maintained the JPY at a very weak level. So when you focus on this, notice the Euro USD, and if you do your technical analysis, you'll notice that it was an extended level. So try just to zoom out, try and draw some trend lines here to identify the extreme price levels. So with our extreme price levels indicating that this was acting as the ceiling. And if you look at the floor in this market, seems to have been following this path. So the recent price level, the price was below the lower trend line, was basically an overextension. So there's a healthy bounce towards the upper trend line. So as this bounce continues, I believe investors are more optimistic of a much stronger dollar, because the interest rate hike in the US is expected to be stronger than the hike in the Eurozone. So if the US manages to hike interest rates by, let's say, 0.75% or even 1.0%, then this will be a much stronger booster for a stronger dollar compared to the euro. So we could see some continuation of the original trend where the dollar has been strengthening against the euro. So if you scan these and you zoom out to check all the way back, then you'll notice it's a trend that has not started now. So from around 15th May, let's look at the daily chart. So I'm talking about this price level right here. So from around May last year, the dollar was very weak against the euro, but since then it started strengthening, kept pushing down, and now the exchange rate has hit parity, bounced, and you could see a further retest of the same. So it's quite a common theme that once a major level has been hit, the market may want to retest that level before making another move. So as the euro continues strengthening against the dollar, maybe we could see some further upside, maybe towards the upper trend line. But most importantly, a key or a very critical level in this market is the parity level, the 1.0 price level. So as the price continues rising, we'll be focusing more on the Fed decision. So if the euro goes ahead and hikes interest rates, maybe even some further upside towards the upper trend line. So potentially, the market could rise all the way up to the upper trend line. And once we get here, then we might look at the potential continuation, whether we are going to break this level and continue higher, or just bounce and drop backwards. So key price level to observe, 1.00, the parity level. So the previous low, and this is a low that we experienced some times back. This is the 15th of June or mid-June. So this is an important price level. So if price gets to mid-June levels, we could see some resistance around this area here. And at the same time, the news in the markets might be very influential in determining the next direction that the Euro USD takes from here onwards. So for now, let's enjoy the rise of the Euro against the US dollar. Has been quite a good performance, looking at around 250 pips since the bottom. So potentially, we will be seeing higher prices. And once we get to the 1.03788 price level, then we'll be looking at potential turn back or potential reversal, or even some further pressure towards the upper trend line. So it's a trend line that has held for months. So it's quite an important trend line. So I'll be very patiently waiting for the market to hit one of these levels so that I can squeeze in maybe some position towards the lower side. So, and also, I would like to mention that this is not financial advice, and you should always do your own analysis, make your own decision informed based on your own research. So it's not a recommendation to trade in any way. So it's purely educational. And once you grab these ideas, do some further analysis and make your own decisions. So going forward, I'll be expecting out of interactions with you guys. So if you have any questions arising from the presentation, feel free to raise those questions and I'll be responding to them right away from the live chat. So we already have a nice comment from Patrick. USDJPY 1 hour time frame, do we expect it to bounce off the trend line support level? Yes, this is a very nice question. So let's look at that right away. So USDJPY has been on a very strong bearish momentum before changing direction last week. And this was Thursday, Friday, and then Monday, Tuesday, we have seen the price continue pushing back down. So if you look at these critically, I'll notice that there was a common theme happening sometime in the last 2 weeks. So just remove all these accumulated buyers and try understand what has been happening. So clearly, you can see my trend lines, which I drew previously. So we had a very strong support level running along this area here, and a very strong resistance before the market broke towards the upper side here. So notice how the market broke the resistance level, rallied all the way up, found a very strong resistance here, around 139.389, and then changed direction, went back down further, got to the previous trend line, which was acting as resistance. But now here, the trend line was acting as support. So market traded sideways for the entire day, and this was yesterday, before eventually breaking towards the lower side and seems now to be pushing further down. So an interesting price level is the previous high here. So as the market continues fighting pressure and pushing further down, I am expecting or looking for a potential bullish position. So currently, this previous high could act as the new support, and this is 136.988 or around 137 price level. So as the US dollar continues being weak across board, eventually we expect the dollar to continue bullying the other currencies in the market as long as we continue seeing some further monetary tightening. So these sharp drop might come to an end soon. So the issue is about being prepared and finding the right point of entry, especially if this was to play out as a bullish continuation pattern. So currently, it's still bearish. I'm looking for a bullish positions, but currently, I don't think there's any signs indicating something similar. So I'll be patiently waiting for the next price level, and this is around 136.988. So this is a price level that is very interesting to watch because it might play out to be a very nice signal to go along. So we already broken here. We'll see some further downside. Clearly, across board, it seems like the dollar is just weakening. So even in the last 2 hours, if you look at the market open right after the New York opened this hour, seems like the market is just fighting more pressure on a weakening dollar. So maybe there's some renewed strength in the next cycle or in the next market session. But currently, it seems like the dollar remains weak. So especially when you consider the current news in the Eurozone, this might be a continued theme for the rest of the day. So perhaps maybe even tomorrow, we'll start looking for a buy position, or even just later in the day at around midnight. So just be prepared to look for bullish momentum, signs of bullish entry, so that you can maybe squeeze in a position towards the upper side. So a very interesting market to watch. So for those who have not catched up with the previous session, you should know that there's some bottom line facts that we discussed previously. One is that the monetary policy in Japan seems to have a wide divergence with the monetary policy in the US. So in the US, we are seeing very strong quantitative tightening, or basically the Federal Reserve Bank of the US removing all the stimulus from the economy, and then aggressively raising interest rates to control the rising inflation, which currently stands at 9.1%. So, on the other hand, Japan has been stimulating its economy since the beginning of the pandemic, and even before that. And at the same time, it has maintained negative interest rates to try and stimulate the economy and raise production. So currently, the inflation has not been able to rise significantly in Japan. So they don't have an inflation problem, they have a production problem. So despite having all that stimulus, the government is heavily in debt. So one of the most indebted governments in the world is Japan. And further continuation into this practice basically means that they are trapped, because if they raise interest rates, then the burden from the debt might get even higher. So in this case, Japan is looking to maintain extremely low interest rates, keep stimulating the economy despite the US doing the exact opposite. So this raises the issue of the exchange rate, where we have been seeing over the past couple of weeks, the US dollar strongly gaining against the Japanese yen. So the current pullback in the last 3 days seems like a much needed breather. So eventually we are looking at a continuation of the same unless the fundamentals change. So in this case, as the market continues pulling back down, the idea is to look for a bullish continuation pattern so that you can trade the strength of the dollar against the Japanese yen. So that's the idea around that, and it applies across board. So if you look at the Australian dollar, you will notice that the Australian dollar has been rising against the Japanese yen. So despite the dollar taking a breather, the Australian dollar is not. So just looking at the 1 hour chart, and then you look at the last couple of days, it's a very strong and extreme bullish momentum where the Australian dollar keeps on gaining against the Japanese yen. So if you look at the New Zealand dollar against the Japanese yen, it's also a common theme. So after breaking this trend line, has kept going up and up and up, and we will be expecting something similar happening in the dollar. So as soon as the dollar starts showing signs of resuming strength, then I believe we'll be looking at a potential similar direction with Audi JPY and New Zealand JPY currency pairs, where they are both strengthening against the Japanese yen. So quite a potential position happening around here. So there's also another good question from Tim based on the performance of the dollar across board. Is the inverse concurrently expected on gold? So we're talking about gold here. So this is the chart of gold. So while the dollar has been strengthening, gold has been weakening. So we all know the purpose of gold in the financial markets. It serves as a safe haven, as a store of value, especially in terms of in times when there is uncertainties in the market. So when things are not really looking good, there is a lot of fear in the markets. Investors will remove their assets from the most volatile and risky assets and put them in gold. So if you have kept your money in stocks and the markets are doing badly, or there's a lot of uncertainty in the market, then you're taking a bigger risk. So investors will tend to hedge this risk by buying or getting an exposure in gold. So when you have an exposure in gold, basically means that gold will store value regardless of what happens in the world. And this has been true for quite a long period of time. However, if you look at the performance of the market, especially since the beginning of the war in Ukraine, you'll notice that generally gold has been losing value against the US dollar. So this does not serve well for the narrative where this particular currency is expected to serve as a hedge in terms of periods of uncertainty. So if you are trading in the market and then you are down, let's say 13.56% on gold, then it's not looking good on you if you think you are hedging your position in gold. So we have seen bear markets appear in stocks, that is US equities among other equities. So prices have been going down, and people have been looking to hedge their positions by getting an exposure in other assets. So some of the traditionally safe haven assets have not been performing very well. So the only asset that seems to be doing well in this period is commodities stocks, companies that are dealing with commodities, especially oil. So if there's a company that is doing mining and distribution of oil, it's probably doing well. At the same time, we have seen the US dollar as a currency being very strong against other currencies. So due to the Federal Reserve Bank of the US and the actions it's taking being very aggressive with interest rates, it has restored a lot of faith from investors, and a lot of people are just selling their assets and buying the US dollar. So main reason is that during a bear market, things tend to be quite shaky. A lot of panic happens around, and people can often overreact to bad news in the market. So, for instance, if let's say you are trading a stock XY, and some bad news happens in the market that has the potential to, let's say, reduce the value of the company, let's say, by $10. So sometimes investors will overreact, they will sell in panic mode, and the stock can go down by $30, $40, making it about, let's say, $20, $30 cheap compared to the actual news that happened in the market. So that's the kind of similar expectation we expect in the market. So if a lot of bad stuff is happening, then there's a lot of irregularities happening in terms of pricing of assets and how people react to this information. So you'll find that there's a lot of very profitable companies that have been doing well. They have a record of positive performance, but besides that, the panic has led to a lot of people selling their assets. So when there's those opportunities, then cash is king. So if you notice, every time there's a depression, there's a panic selling, it's only the guys with money or the guys with cash that are able to take advantage of such pullbacks. So right now, a lot of investors are preferring to store their assets in cash, and once they see good opportunities, then they buy back in and drive the prices higher. So we saw this happening locally with Safaricom. The share prices dropped to around 22, 23 shillings per share. A lot of investors used cash, bought back in, and drove the prices back up to around 30 shillings per share. So it's happening globally, and that's strengthening the dollar and reducing the usability of gold as a hedge. So in this case, a lot of investors that are on the side of the dollar are making a lot of cash. The ones on the side of the gold are losing a lot of cash. So that explains why we have strong bearish momentum happening in gold. So it's not looking good, I'll be honest. Not good. This is not looking good for gold or for any gold trader out there. So if you look at the kind of continuation patterns we are having here, this was more or less like a triangle and has been quite consistent theme in gold trading over the last 2 years. So we have been seeing a lot of triangular continuation patterns. And once they happen, then the market continues in a very strong momentum. So the current price level, extremely bearish here. Market drops, retest the area, pushes all the way down. So from the current price level, we could see some further sideways momentum or some kind of consolidation and maybe some further downside. So we could see gold weakening further, especially now that we understand why a lot of investors are going for the US dollar compared to other traditional safe haven assets. So current price level doesn't look good to me personally. The 1 hour time frame, this is what I'm seeing. If you look at the lower side, try and connect these lows, this low, this low, this low, something of this sort. So not looking good unless you have a clear-cut breakout towards the upper side. Then maybe you could have something, and this could also be hampered by some resistance level around this area. So perhaps an acceleration will be much healthier, and then create an opportunity to go short again. So the clear thing to me right now is that if the Fed continues raising interest rates, then a stronger dollar seems like a good bet. So why has the GBP risen? Like today, GBP is strong against the US dollar despite high inflation in the UK. Thank you, Patrick, for your question. I believe that the dollar is weak across board. So despite the strength that we've been experiencing over the last couple of weeks, this strength might continue being there, but as we can all see, the dollar is weak. So it's not against one particular currency. It's weak against the Swiss franc, it's weak against the euro, it's weak against the yen, it's weak against the New Zealand dollar, it's weak across board. So I wouldn't say it's about the pound strengthening against the dollar. It's basically the dollar just being weak generally across board. So a lot of positions that were buying in the dollar are probably taking profits. So this breather might create the next cycle or the next opportunity to go for a bullish position on the dollar. So still checking to make sure that I'm not missing any questions. So double top on pound USD 1 hour time frame. We expect a reversal. Let's see. Pound USD. I'm talking about a double top. I don't think this is a. In my experience, a double top kind of takes a different shape. So I don't know how to do this. Double top could be a pattern that let's say happens at the end of a trend. So it's not always when there's two tops that are equal that automatically it equates to a double top. Sometimes the market may just be moving up and down in a bullish trend. And then as you look for weaknesses in the trend, this is when you experience the double top, where the highs are now equal. So if it's something like this, and let's say you experience a double top, where you have two tops that are exactly the same, and you have the M formation, then in that case, we might say you have a double top when the preceding trend was bullish. But if it's just two tops that are just equal, I don't think that qualifies as a very clear kind of a double top. So for now, what I'm seeing is a market that weakened the trend. So instead of sharply having lower and lower lows, I noticed that the lows started getting stronger, approaching the upper trend line. The market breaks the upper trend line, retests quickly, and then accelerates sharply, forming a high that is higher than the previous high. So if you are to connect the previous high here with the current high, it's now higher. And also, when the market pulls back down, doesn't get to the previous low, in this case, it forms a higher low. So from this low to this other low, we are seeing a higher low. So the prevailing theme basically indicates a market that is attempting to form higher highs and also higher lows, indicating a bullish momentum. So it's not very strong if you compare the swings here. So it could be short-lived before maybe even a continuation of the original trend, which was bearish. So this is what my chart is telling me about the pound USD. So as long as we continue enjoying the dollar strength, the dollar weakness, at some point maybe this will end. It seems like the volatility is not all that strong. And if this happens, then potentially maybe a continuation along this path. So something similar to this. So another good question from Charles. Did the price of oil meet support at 89? Good question. I like the path that you guys are taking from Euro USD, Pound USD. We have seen USD JPY, and now we are looking at US oil or the WTI. So the support was 88.279. So you are asking about 89. Yes, it's it's a strong support. Market was clearly accelerating downwards. And now, as the dollar is weakening, the oil market is strengthening. And this represents a very funny thing. So we know that whenever the president of the US is visiting an area, especially looking to address several issues in the geopolitical scene, investors will most probably bet for that president. So previously, or the previous administration of the US, we used to have President Trump. So if he was to visit some place, create buzz around a particular topic, something that he wants to address, then definitely he would get it done. So here we have a funny situation where President Biden of the US went to Israel and then to Saudi Arabia. And we're expecting him to negotiate a good deal where the Saudis would increase their oil output, lower oil prices in the market, and these would address the problem at home, which is high inflation. So somehow it did not work out. So he kind of went home empty-handed. So we were expecting oil prices to start going down right from that. Remember, he visited the country on Friday last week. So on Monday, we were expecting the prices now to start rising. So you can already see there was a very strong on Friday, strong bounce on Friday here. So on Monday, look at how the investors were betting against the US president. So in this case, they were basically saying that the 3 million barrels output is not enough to address the shortage. And they were betting on even higher oil prices. So today, the market attempted changing direction. You can see the push here in the last 1 hour. So the Americans have woken up again. Remember, this is the current hour of the market open. So in this case, it's strongly indicative that we are looking at higher oil prices. So notice that the sequence of the 3 candlesticks here. The first one is going down a long tail to the lower side, indicating a rejection of lower prices. As the second one is more or less like a spinning top with a small range. And now the current one, a strong rejection of lower prices. And if it crosses here or somewhere around the high here, then it's a very strong signal that oil is going up for the rest of the session. So a very interesting time to be trading oil. So we could be seeing some further upside. Remember, we have a very strong resistance level here, around 101.76. So if you zoom out, notice it has been quite a resistance here on the 1 hour trend line. So as the price continues rising and we get to the upper trend line, then maybe we'll be looking for a question of whether to continue the bullish momentum or to reverse and continue the bearish momentum. So a very interesting price level at 101.763. However, in the short run, if this candlestick crosses here, then it's clearly a very strong signal to go for a buy position. So if I narrow down to a smaller time frame, say the 15 minutes chart, then you will easily identify the pattern within the pattern. And this is a bullish channel here. We can all see this. So from the lower time frame here, so it seems like the market has been following these for the last 3 days and could continue pushing even higher. So narrow this down, go to the 1 hour chart, and then zoom. Then it's clear that the pattern within the pattern is headed towards the resistance level here. So you have to be patient, or you have to be patient, then wait for the market to hit the upper trend line. Then from here, we'll be looking at a binary decision, whether the market breaks and we continue seeing higher oil prices, or the precious amounts Biden could push a little bit further. Remember, the conversation has not ended. So he could renegotiate a deal and see higher oil output, which would increase the supply and push the prices back down. So a very interesting area to watch. But for now, seems like the New York guys are looking at even higher oil prices. So a good question from Patrick. How does the low supply of oil in the US affect the Canadian dollar? So when it comes to Canadian dollar, it's a currency that sometimes is described as a commodity currency, mainly because the Canadian economy is heavily dependent on the price of oil. So if the price of oil is higher and they're exporting more oil, then they make more money. So it's positive for their GDP. If it's bad, then they tend to make less money. So if you were to look at the Canadian dollar and how it has been performing over the years, you notice that there is a very strong correlation between the Canadian dollar and US oil. So if there's a higher oil output in the market, not just from Saudi Arabia, but across board, then there will be lower prices, which would be lower revenues for Canada. So Canada will always benefit from higher oil prices. If they are lower, then that's not very good for them. So that's one thing to keep in mind. So for instance, if you look at the Canadian dollar against the Swiss franc, and you look at the longer term performance, you'll notice everything that has been happening here. So for instance, in March 2020, when there was an oil price war and oil prices had really gone down around, this was March, April. So when oil was at the lowest, then the Canadian dollar against the Swiss franc was also at the lowest. So if you, let's say, go to US oil, take a higher time frame, okay, let's do weekly, and then you look at the most extreme lowest price in 2020. So when oil was trading at around $8 per barrel, then the Canadian dollar against the Swiss franc was trading at around 0.66056. So when oil started recovering, then also the Canadian dollar started recovering. So a very strong correlation between the two. So depending on what happens in the oil scene, then we can associate the correlation with the Canadian dollar. So thank you for the question. I think it was very helpful for this session. All right. So now that we are approaching the end of the presentation, I'll be looking at one or two other assets before we close the session. So I'm extremely sorry, I'm looking at Euro USD. So Euro USD seems to be a very interesting currency pair because it has remained within pattern. So just bouncing from the lower trend line and rallying towards the upper trend line. So as we head towards the end of the week, I would still be bullish on Euro USD. But at some level, once we get to the resistance around 1.03788, or even at the upper trend line, then I'll be looking for bearish momentum as I am betting on a very strong dollar going forward. So USD Swiss franc seems to be strongly correlated with the Euro USD. So probably the opposite, the right opposite. So this is what has been happening with this asset. This is the 1 hour chart. So if you zoom out, you notice the acceleration downwards, and then upwards, and then downwards. So the USD Swiss franc seems to be extremely bearish here. But at some point, once the dollar starts strengthening across board, then we will be looking at the continuation of this original trend here. So USD yen seems to be the most or the best fundamental trade here. So if the New Yorkers decide today that we are looking at a higher USD yen currency pair, then the price action will be telling us, and this will be very interesting to trade. So at some point, I'm looking at a strength in the US dollar against the Swiss franc. Against the Japanese yen. So regardless of what happens in this market, it's clear that if you remove all the noise, go to a smaller time frame, such as the 15 minutes chart, then you can easily tell that this is the path the market has been following, and this other one is the path. So knowing your path makes it easier for you to speculate on these assets. So if we happen to bounce strongly from the lower path here, then it could be an opportunity to go for a buy position. So remember, the idea is always, this case, for USDN, as long as the fundamentals remain the same, is to always to go long. So at some point, I'll be monitoring for some strength. If that strength manifests very well in the markets, then definitely I'll be looking for a buying position. So the fundamentals indicate bullish momentum, but the technicals are not yet indicative of a strong market entry. So as for gold, remains strongly moving sideways. So unless there's a breakout, maybe we can make a decision based on that. So for US oil, made a lot of lines here. So if I try and reduce some of them, then across at the current price level or a little bit higher at the end of the hour, then might be very bullish for US oil for towards the rest of the session. So I'll be monitoring these as a potential entry for a bullish position. So this is very interesting. So if the market closes here based on point number 1 and point number 2 here, then this might be a signal to go for a buy position. So remember, it's short-lived. It's not a position where you need to make, let's say, 10 times your investment. So the targets are just close by. So if this happens, then this could be a very nice theme going forward for the rest of the day. So looking for other US assets. So USD, Swiss franc, New Zealand USD approaching a very strong tipping point. So remember, we had some very strong resistance points around this area here. This was a couple of weeks ago. So if the market happens to find resistance here, remember the idea is to continue going short or continue buying the strength of the dollar. So thank you very much, guys. Thank you for your time. Thank you for your participations and your questions. I hope to give you more value going forward. So we'll be doing these sessions regularly. This is only episode number 2. So hopefully episode number 3 will be more engaging, and we'll manage to capture some of these opportunities on time. So there's a question here: how can I understand the chart because beginners pound USD? It's a little bit mixed, your sentence. Don't quite get it. How can I understand the chart? Okay, the reference is very clear. It's pound USD. So you're looking at pound USD. So pound USD has been one asset that has been trading on a bearish channel for quite a lengthy period of time, swinging up and down and up and down and up and down. But the lows stopped following the lower trend line here. So this was the original lower trend line. They changed and got a little bit weaker. And this was on a longer time support. So if you go to a 4-hour time frame, you'll notice that there is a longer time frame support that has been holding here. So if you use the daily chart, you notice those are very, very sharp swing towards the lower side. And since then, you'll notice that for our chart back again, there was an overextension of the trend towards the lower side, and now a very strong bounce, and now we are headed a little bit higher. So based on this information, you can easily tell where the market would be headed. So if you just, let's say, draw a trend line along here, then it would give you an idea of what's happening in this market. So let's try and remove all the noise here. Just add some nice trend lines here, just mapping the lows and the highs. And if you zoom out, you'll notice that this goes all the way back. Then from here, we can have an understanding of what has been happening. So from the 1-hour chart, market sweeps all the way down, up, and then continues pushing down. So notice the weakening of the trend here, and this on the 1-hour chart, and then the breakout. So after the breakout, market gets to a high, which then pulls back down. But now if you compare the current high, this is the previous high of yesterday, versus the high of last week here, a low of last week versus today's low, then clearly it's more or less like a wedge. So in a wedge, you notice that there is some form of dying volatility, and as the volatility gets smaller and smaller, then at some point we expect some impulse breakout. So maybe something along this path. So as long as the market remains within a triangle, it's well and nice. But if we happen to find a nice breakout, maybe perhaps towards the lower side, then this would basically imply a very nice position for us. So thank you very much, guys. Thank you for your time. Thank you for your questions and participation. I hope to see you on the next session.